Okay, Jeanette, sounds good. Let's do a quick sound check here. Make sure
I
everybody
hear
can hear
you.
me.
Sounds
Okay.
perfect. Sounds
Well,
good.
thanks for having me out. It's getting to be lunchtime, I know, for you Eastern folks in New York and on the East Coast. So we will have fun. We'll go through this in about 30 minutes or so, but this is going to highlight momentum patterns that I see working in the markets right now. And with the volatility we're seeing, it's been something that I think everybody should know about. So Jeanette, if you're okay, we'll just dive right in. And then like Jeanette said, take a look afterwards. We'll have some fun time at tradeoff.com. And she has a special sign-up link, so make sure you know that. And that's tradeoff.com/trade-thirsty. You get the free $5 there. It's a lot of fun. You can
All right.
use
Yeah,
that.
Mark, it's all you. Go ahead.
Okay. All right. So just making sure, let me pull up my questions here, make sure everybody can hear me okay. So if you can just type in a yes, I'm going to advance my slide to the risk disclaimer here. And if you can see that advance and just type in a yes, that'd be great. So make sure that it's working. All right. All right, great. Let's go ahead and get through this. This is great stuff. If you're coming off of the last presenter, Mike, talking about MACD is very appropriate. So first of all, before we get started, just understand the common sense aspect of risk with trading. Trading involves a high level of risk and is not suitable for all traders. Before deciding to trade or invest, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. So my thing is, before you start trading, just understand what the risks are with trading, and it's pretty much common sense stuff. Don't trade with money you can't afford to lose, but obviously over time, our goal is to make money in the markets. Okay, next one is the simple webinar outline we're going to talk about today. I'm going to show you 3 different setups that I like in the markets, and we'll talk about where to enter and exit with some ideas as well. So my background is from the hedge fund space. I was a senior strategy developer for a couple of Star Search winning hedge funds and have been doing this for a long time. So my specialty, if you will, is creating different market analysis tools and quantitative trading models. So I'm a big believer in strategy, as Micah was talking about last presenter. I think that's a great idea to approach the markets. You have to have rules in place so you can be consistent with achieving profitability with time-tested strategies. So I'm going to show you the climbing momentum setup. These are the bullish versions, elevated momentum setup, and the runaway momentum setup using either MACD, or I've got my own in-house tool that I use called Top Momentum Indicator. That's slightly different, but MACD works well as well. So you can use either one of those. So let's talk about the climbing or falling momentum setup to start things off here. This is probably the most frequently observed. Now, what's interesting is I tend to see the climbing momentum setup more than I do the falling. For whatever strange reason, it doesn't happen quite as much. But the climbing momentum setup is where a market is achieving higher lows and higher highs with near zero momentum histogram values and with the cycle zero touch pattern. Now, it's a mouthful, but I'm going to show you exactly what that means. So it's pretty easy to see on a chart. So the thing to remember here with the definition is, let me go ahead and pull up my drawing tool. Give me a second here. It's a little bit of a hack, but it works really well. Just 1 second here. Basically, the key to remember here is that we're looking for the standard definition of what we'll call a trending market. So higher highs, higher lows, and prices moving higher. And then in the context of that, we're looking for a momentum type pattern called the climbing momentum setup. Okay, so this is an example using monthly Amazon chart, and you can see here that's very clearly prices are achieving higher highs and higher lows. And here's the thing also that I would challenge you with. I find that most traders do not look at their weekly and monthly charts nearly enough, and you're going to find some of the best setups out there are on the weekly and monthly charts. When you find a setup, in my experience, on a weekly or monthly chart, it tends to be more powerful than what you find on a daily or intraday oftentimes. So intraday, the lower time frame, can oftentimes give you more noise. Daily charts are obviously good. I do most of my analysis in daily charts, but I also look at my weekly charts and monthly charts quite often, and I've found some really strong, really incredible setups on that. So the climbing, turning our attention down here to the MACD pattern, the arrows you see in my chart are really representing an uptrend in Amazon that's well underway. We're looking at the monthly chart here, and you'll notice that if I look at my indicator line, this is both present on my top momentum indicator. The same type of indicator design is also available on your MACD. So if you look at this, this is a very strong indicator line reading. So my indicator line, which is the blue line here, is well above zero, and then also it has the signal line as well. So you want that ideally to be pretty strong, and this says overall market momentum is very strong. Then we turn our attention down here to the histogram, which is designed to measure, for the most part, with MACD, and mine a little bit, I've got a little nuance in there, but the difference between the indicator line and the signal line is what's represented down here on your histogram. So when you get a surge up, we're looking for a surge up and then a correction, you're seeing the histogram surge up a little bit here and then come right back down to around zero or slightly above zero. So this is where the green arrows are coming in. So we don't want to buy on the run up or near the peak because we don't know how far a market's likely to go up. So the further a market goes up, for example, on an up cycle, if you will, the more risk that you're introducing to your trade and the less profit potential. So every swing in the market, if you will, is defined. Swings don't last forever, but the goal is let the upswing happen and then let the downswing, come into the market. So I'm going to draw that on my chart here. We've got a big upswing right here. This is hard to buy on upswings unless you use a very specific strategy for that. But in general, we have our upswing and then we have our downswing that corrects into this what we'll call the histogram cycle low here. And then that's really ideally where we'd like to get in. And don't forget, a lot of times when you're in a powerful trend, your upswings are going to be prolonged, your downswings will be a little bit shorter. But my rule of thumb is I like to see about 3 bars at a minimum on my downswing. Anything less than that, then you risk jumping in too early and you risk introducing higher risk for your trade. And by the way, we'll help here with questions in just a minute. But let me get through this because this is a little bit of a shorter presentation. We'll jump over to trade-off and have some fun there. So again, the prolonged upswing, we've got a downswing correction, and looking at the histogram is coming right down to around zero value. So that's what we want to get in. We're at the first green arrow, and then we have another prolonged upswing in Amazon and another short and downswing. Third bar, again, is what I like to look at. This value of the histogram on the second example is slightly above zero. And you'll see that both examples have a very strong value in your momentum indicator line. So it's really buying the market. It's buying into a market with very strong momentum, but we're trying to buy at the values, the cycle lows instead of cycle peaks. When you get in at a cycle low effectively, you're reducing your risk and also you're maximizing your profit potential to the upside. And that's exactly, as traders, what we want to do in a perfect world. And then remember, if you're part of a very strong uptrending market, as we've seen here on the monthly chart for Amazon, you typically will have prolonged upswings and shortened downswings. And so that's something that is not necessarily unusual for markets. Now, the next example here is a daily chart of Apple, showing you several different looks here. So the next one here is a shorter term one. We have a strong up move. We're looking at higher highs, higher lows in the daily. And then we have our correction, again, waiting for at least 3 bars here and looking at that as our opportunity to buy on the correction. So we've got our up run, and then we have at least 3 bars on the correction. Most importantly, we're watching our histogram right here, and then we're watching the correction. And then with that correction, we're looking to get in on a dip. We've got the prolonged upswing, we've got the corrective downswing, and the histogram on the momentum indicator down here is coming right down to zero. And that oftentimes can be a good cue that good timing for buying. And then what we're looking for on the upside is we're looking for that follow-on swing. And that's what we're taking advantage of here. So this is a strategy you can use to get in strategically to a trending market, or you can use this just to take advantage of one upswing in the market. So this is, again, for swing traders, you don't want to overstay your welcome, but just essentially a swing up. And in this case, we have a gap up, most likely due to earnings. And then in that particular case, sometimes it's best just to take your profits. The second example here is a little bit of a reversal. We have a high that runs up, depending on where you measure, and then a higher low. So in this case, it's mostly the higher low we're looking at. The histogram runs up here, gives us a nice positive value, and then comes right back down close to zero. And thinking in terms of cycles again here, so we've got the upswing, a short and downswing, and then our histogram value comes down close to 0, and then we're looking for a follow-on upswing. And what we don't know is we don't know how strong the follow-on upswing is going to be, but we see a strong presence of buyers in a market. The fact that the histogram comes down to 0 and doesn't go too much further than that is telling us that the sellers are being subdued to some extent by the buyers. So the buying force is a lot stronger than the selling force, and then the follow-on upswing is something nice to take advantage of quite often. And typically, if this plays out like we want it to, we should easily surpass the previous high and the follow-on upswing, and that's what we're taking advantage of in the markets. So this gives you an idea of what it looks like on a daily chart. We saw the monthly chart of Amazon. Let's take a look at the bearish equivalent to the downside. We call the following momentum setup, is where a market is achieving lower highs and lower lows, just the opposite definition, with a near zero momentum histogram values and with a what we'll call a cycle zero touch pattern. We're looking at that with respect to the histogram. So histogram of the momentum pattern is really what we're watching closely. Now, the whole of this presentation is to get good at reading what the momentum indicator is telling you. And you can use MACD for this. MACD is probably one of the best standard indicators you'll find on a platform. So I like it a lot. I've been obviously developing trading indicators and strategies, so I've got my own nuance of the momentum indicator that I use up here, but you're going to find a lot of similarities between this and the MACD. So the first one, I just want to show you this, is a little bit of a violation of what I've been telling you, and that is higher highs and higher lows, but this can be very powerful as well. And this is a bearish divergence. So this is a situation where you have you have your falling momentum pattern here with the histogram readings here. I'm going to change my color here to cyan, make it easier to see. So you've got a nice strong momentum surge, weakening, 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 but you have higher highs and higher lows. So we want to be on the long side of that. And then you have your first negative value down here, right where that red arrow is coming in, and then you have an upswing. So you now have a situation where momentum is telling us that we have a negative value at the histogram coming right back up to 0 here, and at the same time you have what we might call a bearish divergence slightly. So the reason why I want to show you this pattern is because the key to this whole thing is that you make new highs barely in the market, but you don't see a lot of new buying coming in. So this is a great litmus test for whether the buyers have kind of exhausted themselves. And so in this case, we have, again, the negative bars are very important. They're just slightly negative coming into this cycle peak, and then a rebound right up to 0, and that's where the red arrow is. And the most important thing right here, again, huge clue by the market, in this case, Apple Daily, is that we have new highs right where this big red arrow is, but we don't get a new close at new highs, and nothing really happens. So prices go up to new highs. When that happens, you can get some of your best trade setups, if you will, in a market, because we have the falling off of momentum, both at the indicator line, which is great, classic definition of bearish divergence. And so the weakening of the momentum, trading barely into new highs, and the stock cannot seem to close at new highs, and nothing happens. It kind of just stalls out and goes dormant, goes quiet a little bit. So the buy stops have been run. Markets are notorious for running stops, and no new buying has come in. And that's a huge clue, especially when you have momentum falling off like this and an underwater reading here, if you will, in your negative histogram. All that together is telling us that the buyers are really tired, and that the sellers most likely are going to have a rate response to this. It'll give us a good trading opportunity. So right there, with the bearish divergence, introducing a nuance here of how to read the momentum indicator here. This gives us a potential to jump in, flip the switch on for our bearish strategy, and then take full advantage of the downside. So that's one variation of this. But getting back to our more standard definition of what I talked about, this is on a 240-minute chart. We have a situation where we now have a lower high. So we have prices selling off a little bit, bouncing back, but registering a lower high. But more importantly, momentum is falling off. The upside momentum with each cycle is getting weaker. We have a slight negative here, and then it's going into a negative cycle peak right where the big arrow is. So this is a huge clue that the sellers may kick into gear. What we don't know when this happens is how strong will the seller's response be. So we have no way of knowing at this point in juncture that the sellers are going to come in and have this kind of a downside response. But the probabilities favor something on the downside, and especially if we can break the previous low, which happens very quickly in this case, then we sell off, and then we create another selling opportunity, which is a different kind of setup here on the downside, which I'll show you in just a minute. So the subtle nuances of the MACD indicator, or in my case, the top momentum indicator reading the histogram, can be extremely powerful, and especially as a complement to other types of trading analysis when you're trying to find high probability setups. So this next setup here is basically what we'll call the elevated or submerged momentum. This is a degree stronger to the upside, a degree stronger to the downside. So it's not, the first one was a standard momentum type setup where you can take advantage and buy or sell, obviously for bullish and bearish setups. This has taken things up a notch. So the elevated momentum setup, cycle low, is where the cycle low occurs with positive momentum histogram bars. So this is what I call an elevated cycle low. So we have a cycle low here coming in on the 240-minute chart in Apple. And you'll notice when this low comes into the market, you'll notice that the histogram bars are staying fairly positive here. And what that's telling us is that's telling us that the buyers are much stronger than the sellers. And this is oftentimes a great setup to the upside or downside. In fact, I'd say it's better than the previous setup in general, where you could get a very nice positive swing. And that's typically what you want to trade for here, is your follow-through swing. So the first green arrow on the left side of my chart, that's an elevated cycle low. Elevated because, again, we have positive green histogram bars right when the cycle low comes in. And this forecasts a strong swing. The buyers are clearly in control in this particular example. And then the right side of my chart, I've got yet one more example. Very strong buying coming into the market, very strong positive green histogram bars, and trading into the cycle low. Now, this is a great setup. Doesn't happen very often, but this is one you want to watch for. You'll notice what happens with my price bars. We have clearly extremely strong selling or buying coming in, to push prices way up. And then in a normal situation, you'd have prices correct downward, but instead you have prices kind of flatlining almost. So the price bars are trading sideways during a period of time when they ought to be selling off. And this is a case where a market, the buyers are really in control. It's really violating the down cycle, because the down cycle should be causing prices to correct a lot more than they're correcting, but instead they're trading sideways. And this is where you can get a very nice high probability pop to the upside. It's a short-lived upcycle swing, but this is where you can turn on your buy strategy and oftentimes take some money out to the upside using stocks or options in this particular case. So let's see here. In this case, again, two examples of what we'll call elevated momentum setups to the upside. The submerged momentum setup, or submerged cycle peak, is where a cycle peak occurs with no negative momentum histogram bar. So it's just the opposite of what we saw. Using the same chart, just to show you how often this stuff can happen, we have a huge sell-off here from our bearish divergence in Apple, 240-minute. Very negative histogram bars. And notice that when our cycle peak comes in, our histogram bars are very negative here. And that's a situation where the sellers are really in control, and then you get that negative follow-on momentum. Oftentimes, that's a high probability trade opportunity. And as you start to really study your charts, you're going to see that this type of thing happens a lot more than you think it does. So if you're looking for trading opportunities, this is a great way to find momentum-based trading opportunities that are obviously both intraday, end of day, a longer term, shorter term, but they tend to be very, very nice opportunities to trade a powerful swing based on momentum across all time frames, really for any market, every market out there. If you have a market that's really kind of dead and not going anywhere, my advice is don't trade it, because you can't, it's not giving us any clue, any relevant clue on where it's likely to go next. So if you have a market that somebody says is really bullish fundamentals, but it's just kind of trading sideways, not experiencing a lot of upside or downside momentum, my advice is to just to pass. All right, because it's not, nobody's interested in it, traders are not active in it. And where we start to find our higher probability setups, where setup really is a short-term forecast, that's with markets that are experiencing a higher momentum, either to the upside or downside. So that's where we get our best forecasts or setups. Now, the final one here is what I call the runaway momentum setup. And this is the strongest of the three I've shown you so far. And this is where a cycle low occurs with climbing price bars during the down cycle before the cycle low. So this is almost a broken cycle. It's a market totally violating what should happen. So here's a good example with Apple. So if you look at the chart here, I'll get my drawing tool out. There's evidence of kind of a normal cycle action that happens fairly frequently. And so what happens here, it's very subtle here and almost hard to see, is that this first surge up should be encountering a down cycle of some kind right here, where my green arrow is, but it doesn't. So it totally violates. We're missing a down cycle here, and prices don't even fall. They just continue to really rise close to close. So if you ever have a market that should be experiencing a down cycle, but yet has higher highs and higher closing values, that's a market that's experiencing what I'll call a runaway momentum pattern. This is typically a very, very strong follow through here. And you can see that exactly happens for a short-term 240-minute swing. So when you are expecting a down cycle, you can use either a cycle indicator or momentum, and nothing happens and prices continue to kind of violate that. They push through that to the upside. That's what's called a runaway momentum pattern. And chances are the market has further to go. And this is where you can take advantage of what I consider to be a very high probability momentum type setup. All right, that was quick and showed you a number of examples. Now the goal of all this is to really show you examples of how often this happens. So this can happen on a weekly chart, this can happen on a daily chart, but this is not counter trend. We're not interested in counter trend in this particular discussion. We want trades for the most part with the trend, and I showed you the exception of when you have a very well-defined bearish divergence or bullish divergence, where a market kind of hits new highs and stagnates, and shows you that the stops have been run and no new buying or selling is coming in. Those are sometimes your best opportunities to get in. So I've got a chart here of the S&P 500 weekly. Let's take a look at what's happening. There's a number of the setups we've discussed that are happening. The first one over here, in fact, I'll move my, go back in time just a hair here to show you the first setup here is the rising momentum setup, the first one we looked at. So that has the up action, if you will, in the histogram, has a little bit of a nuance here, still goes to new highs, but comes back down to the zero level. And I'll change the color of my ink here to cyan. So you'll see the big surge up in your histogram, and then we're coming back down to momentum, and then that's where we have that climbing momentum setup. So this is number one, have a nice follow through swing there, and then we can find another elevated cycle low here. Remember when I told you when we have our first, so number two, I'm going to circle this right here. This is number two. We have our surge, and then remember when I told you prices flatline, they start going sideways? That's an indication that a market's very strong. So we have an elevated cycle low right here, and this forecast for a follow-through swing to the upside. We get that. In fact, I'll draw that in green so you can see that standing out a little bit here. So this is our run up here, the follow-on cycle swing. And what you can do is you can turn on a quant strategy, turn on your buy signals. This is a weekly chart, or what you can find is kind of a bullish setup within a bullish setup. And that quite often can really increase the probability of falling through to the upside. So the longer term weekly chart right here, number two, is strongly suggesting upside continuation. And sure enough, you see the S&P 500 really run up strongly here for this duration, and because of the elevated cycle low. And then we don't really have any super well-defined setups after that. Now, for those of you who are saying, well, we have there's some nuances here. So nothing is really definable or exciting. This is one of those kind of slow notching up trending patterns, which is fine. But then we get to our runaway momentum patterns over here to the right. So you have a couple of cycle lows here. It's hard to see because they're not really manifesting themselves very well. But you've got a run up here, should be a cycle low, run up and cycle low, but it's not. There's no discernible cycles here in my histogram, and prices are continuing to move higher. So we have a run up here where we should have a downswing here. I'll use a red marker here. So run up here, we don't have a downswing. We have sideways trading. That could be almost a combination between the elevated cycle low or runaway momentum. And then you have another run up here, and then you have sideways action, and then you have a huge run up there. So this is very strong momentum situation here to the upside, and there's two swings you can take advantage of. I'll draw in green here to the upside, and this is where this is really giving you the forecast in both of these upswings. And then the way to trade this is to drill down on your daily charts or your 120 or 240 minute charts to take advantage of. So it's really giving us an indication of where's the strong current of the market taking prices. And when you see this happening, it's to the upside. And so understand that a down cycle swing in this context typically will cause prices to at least trade sideways, to take a breather before it goes on with the next surge. And you want to catch that next surge, you can drill down to your 120 minute, 60 minute daily charts and find bullish setups in these environments. And those are going to be some of the best trade setups you're going to see. They tend to be very low risk, and they tend to be high profit potential, but reading the nuances of your momentum indicator is quite powerful. Okay, what type of momentum was number 2? SP, it's a great question. So this could either be a runaway momentum or a elevated. It's certainly an elevated cycle low in both cases. I would argue that it's almost runaway momentum because you just almost can keep on getting higher highs right here in during the time cycle where you should be getting lower highs with the down cycle. So it's when a market totally violates the down cycle, continues to go higher, that's when you want to take note. And that's really either a elevated cycle low or possibly a runaway momentum pattern. A great example of this was back in December of 2017. We had a daily gold elevated or runaway momentum situation. So let me pull that up on the daily chart here. Go back to December, and you'll see what happened. We had if I had a longer term trend line drawn here, you'd see that this low right here in mid-December bounced off of a trend line. But you'll see here we have, it's a little bit hard to discern this without a cycle indicator in this case, but right in here you have your first upsurge, and then I'm going to use red because it contrasts best. This is my upsurge, but then look what happens. There's no downsurge. Prices continue to get higher high, higher high, higher high. This is a massive runaway momentum pattern in gold. I mean, the buyers are so excited about buying gold that they're overwhelming any possibility of a down cycle. So the down cycle here would be, with any cycle indicator, you see it more clearly, but with the time frame, I'm using 1221 for my cycle indicator, a little longer term, it's not as discernible there. But that's what should have happened. We should have had a down cycle here. It totally violated. We kept on getting higher highs, higher closes. And then when that happens, that's usually a pretty strong indication that a market's really taken off the upside. Where is the 5S? Okay. Yeah, so that's Jürgen. That's part of the game. So we'll get there shortly here. All right. So this gives you a little bit of a context here for the indicators. Do you guys want to look at any market, any requests for specific symbols, stocks, or futures or forex? We can take a look at that and find one of these patterns. Tesla. Okay, TSLA. Let's take a look. Give me a second here. Okay, I got a couple of them here. Let me, just 1 second here. Let me fix this quickly here. I'm trying to get my drawing tool to function. There we go. All right, so Tesla, TSLA, let me put that up there. And right now, okay, so you can see a couple of them. Here's a really good one. So just recently, to the downside, you guys see the submerged cycle peak. So we have our down move here, and then we have our bounce back. But more importantly, what's happening with momentum? Momentum goes underwater here, and then my cycle peak comes in underwater, right? In fact, let me do something here that might be helpful for you guys to visualize this. Give me 2 seconds here. I'm going to add a cycle indicator here that might bring some definition here to what we're seeing. So this is probably going to help you see it a little bit more clearly, but I added a cycle indicator down here at the bottom of my screen. So you should see that here. Okay, so let me change the color. Hopefully red's easy for you to see. But we can all clearly see a down cycle right here, right? I mean, there's no guessing that. That's a cycle peak, down cycle, up cycle, and their cycle peaks very clearly here in July, early July on the daily chart for Tesla. So this whole region right here is what we call a submerged cycle peak, and that forecasts a very strong move to the downside, right? So that's a powerful setup right there. That's probably the clear setup on the daily chart, at least. We have another one over here, technically speaking. So we have and the next cycle is a little bit of you get a little bit of a messy cycle peak there. But technically speaking, if you have another cycle peak over here, it's kind of an impulse wave that happens in between, but it's lower than the previous one. You could also trade that as well. It doesn't end up being a super strong down cycle, but that is a submerged cycle peak. It's a little bit of a messy peak, but you are underwater with your histogram bars, and so that usually forecasts to a new low. And it gets there, but it doesn't hold the new low very long. So you should be profitable in that trade, but it doesn't end up being a big swing like the first example there does. So the other thing I tell you for Tesla is take a look at your monthly or weekly charts. So weekly chart here, you have some really nice examples of elevated cycle lows in the first half. So remember, we have a big run up, and then we have a cycle low right here. Positive green histogram bars, very simple cycle indicator calling for a low right there. What happens? We have a beautiful upsurge here in the next cycle swing up. So that's what we want to take advantage of. We don't want to overstay our welcome. And then we have our next situation where we have our down cycle. Very clearly, easy to see right here on the cycle indicator, but prices aren't going down, they're going sideways. So then we have another positive value of our histogram right in line with when our cycle low comes in. And what does that forecast? Another surge to the upside. Sure enough, we get that. So look at your weekly charts. You're going to find some of your best setups in the markets out there. After that, we go into a situation where this is almost what I consider to be a broken setup here for the downside. So this is a cycle peak right here. Very clearly see that. Let me change my color to cyan. So this is a cycle peak, and we have a submerged cycle low. So all we know at that point in time is that we should get our down cycle, but it's almost a failure in this case. And you're going to get that over time. And so instead of going to new lows here, we have prices start to hold steady here and start to tell us that maybe they're not going lower. You've got to watch for that. So this is an indicator, setup that goes our direction fast. And if you find that it starts to stall out, then there could be problems. And sure enough, this goes to new highs and before it goes to new lows. So this almost becomes a bearish divergence pattern. You continue to get your cycle lows or cycle peaks here in underwater histogram. So this still forecasts some down cycles, but not as clearly as we'd probably like. So right now we could be coming in a situation where it's that rising cycle low here with Tesla. So this could be a situation where we might be able to find a buying opportunity. I like the momentum here. We have a surging upside green right here to where we are coming in right now. As long as our histogram bars don't turn negative here, then this could be a buying opportunity for Tesla. If we start heading down here to any degree, then that's when we want to jump ship and ignore that. So I got a couple other requests. Nflx, Nflx. So this is the weekly chart for Nflx. You've got one nice elevated cycle low and almost a runaway momentum pattern, but it's right here. The cycle, let's see, cycle low. I'm going to change my cycle settings here to 3.5, and then a little shorter term, maybe give us a better definition here. You can see here back in early 2018, Tesla had a nice run up and then had a correction. That cycle low came in right when you had very positive green histogram bars. So that, so that's a good example of that. And then you have an example over here of really almost a falling momentum setup, but we don't want to take that. And the reason why is because prices are clearly at new highs right here. I mean, we didn't eclipse the old high just by a little bit. I mean, it surged the new highs. You ignore that because that's probably going to lead into consolidation. Sure enough, it does. The daily chart we'll peek at real quick, and then we need to make our way over to trade-off. Nice example here, by the way, of a submerged cycle peak or a falling momentum setup right there. Led into a surprise earnings report. So from a momentum perspective, the earnings was kind of forecasted here. You have barely a lower peak right here. You have falling momentum heading into your cycle peak. And I'm going to change my my cycle settings to 5.8 again because that tends to work better for the daily. So I think everybody can see very clearly cycle peak here. We're at zero or underwater slightly. And so this would forecast a down move. And sure enough, it happened with the the earnings announcement. So this is the type of really nice setup we can get. Had some good examples right here. Elevated cycle low to the upside for daily Nflx, and then you had two of those. So two elevated cycle low setups right here with this cycle low, and right over here with this cycle low. And they both forecasted nice surges to the upside, nice powerful upswings, and you got both of them there. So my challenge to you is take a look at these patterns.